Morning, Shrishti. My sense is the IDFC First Bank has reported a very stellar set of numbers. And I think in terms of asset quality, in terms of the loan book growth, and in terms of the CASA ratio, I think the bank has done a commendable job. In fact, the management commentary post the Q4 numbers has also been quite encouraging. If the investor has a 2 to 3 year horizon, he should, obviously use any dip to, buy into the stock. Even at the current levels, we believe the risk reward for IDFC First Bank looks pretty impressive. Our medium term target is about 75 to 78 year. And I think looking at the kind of growth in the SME, MSME kind of business segment, and plus the kind of CASA, percentage which the bank enjoys, we believe that, incremental growth from now on would be quite significant. The NIMs are attractive, the asset quality is under control. So I think, stay invested for the longer term. And I think you could definitely think of making a decent gain, from current levels. I think as far as Galaxy Surfactants is concerned, I think it caters to the FMCG segment quite significantly. And here, if the investor has a 12 to 18-month horizon, he can definitely look at accumulating the stock on any decline. Although valuations are not cheap, but I think the company has a very high degree of competency in its business segment, enjoys a very rich FMCG clientele, and I think definitely incremental future growth appears to be positive. Balaji Amines, I would suggest to avoid as of now. In its place, I think he could look at either Ashok Leyland or Tata Motors, which look pretty attractive at the current levels. I believe the CV cycle is extremely strong, and I think both Tata Motors and Ashok Leyland can give a very good risk reward over the next, say, 1 to 2 years. Now, I think lemon tree, I think, has to be, taken as a long-term investment. I think if the investor can hold for the next 12 to 18 months, the hotel sector as it is has been doing very well. Room prices have gone up. There is definitely a very large supply constraint, which has helped, the industry grow quite significantly. So I would believe that, lemon tree, which is executing a large capex, could benefit over the next 12 to 18 months. So I think if he can hold on here, he could expect another 15-20% upside. So definitely, I think one should hold on here rather than booking profits at these levels. I think from a longer term perspective, Lumax Industries is a very large vendor to the passenger car and the two-wheeler segment. I believe the stock has corrected from its high, but fundamentals continue to remain very strong. And I think even in the current year, that is financial year FY24, I believe volume growth as well as margin expansion for Lumax Industries would continue. They are large vendors to almost all the new car models in the passenger car space for most of the auto majors, especially Maruti. So I would believe that if the investor has at least a 12 to 18-month time frame, he can definitely add at the current levels for a decent risk reward over the next 12-18 months.
All right, let's take the next query coming in from Ron from Mumbai. Kunal, he wants a few dividend yield shares which he could hold for the longer terms. Instead of you, I'll take this query to Avinash. You'll be better placed to answer this query. A few dividend yield shares that Ron can hold for the long term.
I think my sense is, 2-3 companies come to my mind. One is REC, which still offers a very attractive dividend yield of almost double digits. The second company is Vedanta. Vedanta also gives very good dividends to shareholders. Here also possibly, from a longer term perspective, a dividend yield share like Vedanta can be accumulated. And finally, Coal India, which is expected to announce their full year March numbers. I think normally dividends from Coal India are pretty attractive. So I think these three stocks, if the investor can accumulate a reasonable expectation of a decent risk upside, both on the on the capital as well as on the dividend yield factor can be considered. So these 2-3 shares are definitely good enough for dividend yield purpose. No, I think Shishti Mukund, I think the investor can hold on considering the fact that Mukund has resumed operations of its steel plant from a very long time. Most importantly, Mukund is a specialty steel producer and has been now recording decent operating profits for the last 3 to 4 quarters. In fact, a large part of its non-core assets have been sold off. So the management has made it very clear that they want to make the company virtually debt-free over the next couple of years. And most importantly, the steel which is manufactured by Mukand goes into specialty segments like bearings, automobiles. In fact, they are one of the top vendors to some of the large companies like Hyundai, Tata Motors, etc. So I would believe that if you give the stock a little more time, at least the next 12 to 15 months, one could definitely expect a strong bounce back in its financials, which are already reflected in its operating margins in the last couple of quarters. So I think hold on, keep a time frame of at least 12 to 15 months, a decent risk reward can be expected. I think, see, Ambuja Cements, I would suggest, if she has a long-term view, she can hold on because I believe that, cement as a sector is definitely going to look up in financial year FY24. there has been a significant increase in cement bag prices in April, and that is definitely going to benefit larger players like Ambuja Cements. As far as Bank of Maharashtra is concerned, I think definitely it appears to be a very attractive bet because, in terms of their financial FY23 numbers, profits have doubled to almost 2,600 crores. The asset quality has come down from 4% to 2%. The ROE is almost 20%. And I think the management commentary has been very strong. So I think you could expect a decent risk reward here. A price of around 40, 42 in the next 12 to 15 months is very much possible. So I think Bank of Maharashtra and Ambuja Cement seem to be pretty attractive bets at this point of time. Foseco also seems to be a decent bet. My sense is, if the investor has a slightly longer term time horizon, then I think Foseco also at these levels can appear to be a good bet. It's an MNC company into the foundry business, and very few foundries, in the domestic market have actually been very profitable. Considering the kind of growth in the automobile sector, in the capital goods sector, I think the applications for Foseco are quite huge. So I think, on particularly on this share, if the investor has a couple of years of time frame in mind, then only I think he should invest. But it's a great business, and I think the risk reward can turn out to be very good, provided the investment time frame is long term.
Okay, moving on, and Avinash, once again a question for you. Pratibha is currently holding Engineers India at an average price of 111. This particular counter has been buzzing recently. Wants to know, can this counter once again touch those levels? What could be the time frame, and what's your outlook on the same?
Yeah, I think Engineers India is a company which is largely catering to the oil marketing companies as a consultant. In fact, recently the government has announced that whatever expansions happen in the public sector domain, especially for refineries, the entire business will be given first to Engineers India Limited as a preference. So that is the reason the stock has been in the limelight. But fundamentally, the company is very good. The company is virtually debt-free, pays very good, healthy dividends, and most importantly, has an order book in excess of almost 3.5 to 4,000 crores. So my sense is, the stock has shown a big bump up in the recent times. But if the investor can hold on for the next, say, 12 to 15 months, a price of 130, 140 definitely looks possible. So I think use any dip to accumulate this share. Bharat Electronics history can be added if the investor has at least the next 18 to 24 months. Because see, defense is a long-term story. And the kind of order book Bharat Electronic enjoys, the kind of balance sheet strength which the company enjoys, the company is virtually debt-free. Our sense is that within the electronic space, Bharat Electronics is a very large player to the government of India. And I think looking at the growth trajectory in the defense market, one could expect a near-term price, a target price of around 140, 150. But yes, over the next, say, couple of years, this share can definitely generate a lot of wealth. So I think keep on accumulating at the current level. Yeah, I think longer term, I think Tata Steel should be a key beneficiary of the domestic infrastructure market demand here. I think numbers also which were presented recently for Q4 have been quite encouraging. So I think, if he has a 12 to 18 month horizon, he can definitely look at accumulating the stock. The stock is trading at its lowest odd level. And I think once the global metal cycle recovers, China enters the metal market, you could see a strong bounce in almost all the metal companies, including Tata Steel. So he could definitely look at acquiring at these levels, but keep a time frame of at least 12 to 18 months. I think clearly, within the telecom space, a lot of pricing power has come back in the market again. So I think if he can even hold on to Bharti Airtel, I think, his patience could be decently rewarded. Currently, the fact is that 5G rollout is being tested out. So once 5G is officially rolled out, my sense is that, ARPUs could get better. And I think looking at the kind of health of the telecom sector, there are only two big players which now operate, that is Reliance Jio and Bharti. So typically, I think not only pricing power, but in terms of the incremental growth upside for Bharti looks pretty attractive. So I think continue to hold. I would not suggest a switch at this point of time, but keep a time frame of at least next 12 to 18 months. Now, I think looking at the kind of growth in the aviation space, Shrishti, I think, airport business is a very niche business. We probably think that the next company which could get listed is the Adani airport business, which is some time away. But airport business is extremely profitable if you can hold on for the next, say, 2 to 3 years. Considering the fact that, aviation is now picking up, record levels of aviation traffic numbers have come out. I would believe that, if the investor has at least a 2-year view, he should hang on here because this business incrementally will give a very high ROC. But at the moment, the biggest problem facing the company is a significant amount of debt on the books. So some sort of restructuring and some sort of rebalancing, if it is done, one could see a significant amount of re-rating on this counter. So continue to hold. I would believe the next couple of years are going to be quite promising for GMR Infra Airports.